This question has been submitted by Jasmine. The question is, I'm stuck on an accounting concept for balance day adjustments. The pre-adjusted trial balance says there was an initial amount of $3,000 as the medical supplies balance, or it was a debit. But a note says closing stock of medical supplies on the 30th of June is $1,580. What balance day adjustment do I need to make? Let's try and look at this question and see if we can figure out exactly what's going on here. We don't have all this info, so we're just going to make up some numbers, but what we do know is there must be a pre-adjusted trial balance with stock of medical supplies of $3,000. All those other numbers are being completely made up. They're not going to affect this question. We're just using them as an example. So there'll be an item there, stock control or stock of medical supplies 3,000. But then we're told the closing stock is actually 1,580. So how did we go from 3,000 to 1,580, and what do we need to do to make that happen? Well, it comes down to this concept up here. This is a pre-adjusted trial balance. What does that even mean? Well, we need to understand that so we can actually do the answer to this question. And the reason is we've got to go back to what accounting is and where it all fits in. We've got an accounting system where we have transactions. We then put them in the special journals. We then post those to our general ledger, and then we do a trial balance. We sometimes do balance day adjustments. Most businesses will do that. We do another trial balance, and then we do our three reports: the balance sheet, the income statement, and the cash flow statement. What we can see there though is there's two trial balances. We've got what's called a pre-adjusted and an adjusted trial balance. So what we're looking at here is we've got a pre-adjusted trial balance. Obviously something's happened with what we've called a balance day adjustment, and we're going to end up with an adjusted trial balance. So what must happen is what we call balance day adjustments, and some examples could be depreciation, prepaid expenses, accrued expenses, stock adjustments, prepaid revenues, accrued revenues. Depending on where you're at in your course, you might have covered some of these or none of these. But these are all things that could mean the original pre-adjusted trial balance is actually not right, and we need to do some balance day adjustments to get the correct figures. So what we're looking at here is stock adjustments. So what must have happened is from the original figure, which was $3,000, we've gone and had some adjustments. Now to answer that and figure out what's happened, the best thing to do is to go back to the stock ledger and figure out everything that could make it go up and everything that could make it go down. So stock control goes up, it's an asset, it goes up on the debit side, so it's going to go up when we buy stock from suppliers. Could be a stock gain. The owner could give the business stock as a capital contribution. And why could stock decrease? We could sell it. There could be a stock loss. The owner could take it out as drawings, or the owner could donate it for advertising. There actually are a lot of other reasons depending on where you're at in the course. This is just from at this point in Unit 3. That's all we would know, that they're the only possibilities. Well, what are we dealing with here? We're looking at balance day adjustments. The only items there that are balance day adjustments are stock gains and stock losses. Now we know that there are only two choices. Why is this figure different from the original trial balance? And it's because the original pre-adjusted trial balance said $3,000. The adjusted trial balance says $1,580. So what's happened there is the stock figure is going to go down. So if it's going to go down, given there are only two choices are either a stock gain or a stock loss, it can't be this one because a stock gain would actually make stock go up. So we know now that the only thing that must have happened here is there must have been a stock loss. What does that mean and what does it look like? It means that, for instance, we might have had $3,000 of stock of medical supplies. That was what was in our ledger, or in the real world, that's what's on the computer. But when we come to balance day and close the shop and do a stock take, we might actually count up everything and find there's only been $1,580 of stock, and that could be because some of it's been stolen, or maybe there was a mix-up with a delivery or something. But the point is we've got less stock than the computer or ledger says we should. That is called a stock loss. So what we're going to have to do now is fix that pre-adjusted figure of 3,000. What that means is in our stock ledger there must be a balance of 3,000, but we know that really there's only 1,580. So what we're going to have to do is fix that by creating a stock loss ledger, which is an expense. So what we'll need to do is decrease stock control with a credit there of 1,420, and we'll need to do a debit to stock loss. Stock loss is an expense. Expenses go up on the debit side. and we're going to do a debit of $1,420. Now, where does this $1,420 number come from? We'll get to that in a minute. The point is, we would do this entry, this balance day adjustment, in the general journal. What would it look like? Well, we went and did a debit to stock loss of $1,420, and we did a credit to stock control of the same amount. That's the answer. That's what must have happened. The balance day adjustment that's been done here is for a stock loss of $1,420, which was a debit to the expense called stock loss and a credit to stock control of the same amount. How did we get that number though? Well, we got that number because if we just go and reset everything, we know that going forward the balance of stock control in the adjusted trial balance down here is $1,580. So we know that when we balance this ledger forward, that's got to be the balance. So if we had $3,000 to begin with, and then we know that we're going to have a balance of $1,580 going forward, we know that we must have lost $1,420, so that's how we got it. So long story short, how did we have a trial balance that started at $3,000, end up with the same amount for stock of medical supplies at $1,580? We had a stock loss, and to record that figure, we actually went and did this entry in the general journal here, debit to stock loss, credit to stock control.